My name is Alex Alawadi, Managing Partner and Head of Acquisitions for Brookfield North American Real Estate. Today, I want to share how we're thinking about investing through what we believe is a once-in-a-decade reset in global real estate. We believe this moment is not just about recovery. It's about repositioning for the next long-term cycle. Historical index data indicates that periods following the early stages of a new real estate cycle have coincided with improved market pricing, and investors may experience more favorable long-term outcomes. When we look at the prior two downturns, they've been followed by 13 to 15 years of consecutive gains and 10% average annual returns. That suggests we are early in a new cycle, with over a decade left of consistent upside and compelling annualized returns. One of the points that is unique about this cycle is that entry yields are about 200 basis points higher than previous recoveries, and we believe that's creating attractive buying opportunities. When we look at fundamentals broadly, they support our view that attractive opportunities exist today with strong demand across three of our key themes: housing, logistics, and data centers. Additionally, supply presents a similarly compelling story. What makes this cycle different? Construction has collapsed globally. Replacement costs are at historic highs, but development starts are at multi-decade lows. And these stats are just US, but we see these themes happening globally. And this may create a favorable backdrop for existing assets. Historically, periods of constrained supply have supported rent growth and pricing power. We believe the next real estate cycle will be scarcity-led, not supply-led. High replacement costs and limited new supply support asset values, which may provide support for long-term asset values. There is an opportunity in front of us to put capital to work. And as you can see, since the pricing reset in late 2023, real estate valuations have rebounded 7% from their trough, compared to the broader public equities being up 87% from trough. Put simply, we believe current real estate market conditions offer attractive relative valuations to broader equities. Across the sectors we follow globally, we're particularly excited about housing, logistics, and digital infrastructure. In addition to the cost of home prices, we see a surge in demand for affordable alternative housing solutions. One of the most attractive segments where we see outsized growth is in high-quality manufactured housing. There has been effectively no new supply since 2016, and during that same time period, the asset class has demonstrated incredible NOI resiliency, despite incredible periods of disruption with COVID, making it a really compelling diversifier in a portfolio. Given it is 35% cheaper to own a new manufactured home versus a traditional single-family home, we're observing increased demand in this segment. Changing gears, transition has been the theme across our logistics and data centers thesis as trade, land, and power, and technology are all driving significant changes. It's changing how we buy and how goods flow through economies. It's changing land use and power requirements. What's underpinning all of this is the AI revolution. Where data grows, real estate grows. Digital infrastructure demand is rewiring modern industrial demand. Finally, having a great idea is really only the first step. Being a great owner and having great operational expertise is what it takes to win. Even with strong structural tailwinds, you can't be a passive owner in today's environment. This cycle rewards operators with scale, sourcing capabilities, and operational expertise. We believe Brookfield's global platform and long-term investment approach position us well to capitalize on the opportunities ahead. Let me close by returning to our framework for investing through this reset. Here at Brookfield, we believe this is a once-in-a-decade moment in real estate. Pricing is reset, supply is constrained globally, and powerful structural forces, the rise of alternatives, shifting demographics, and accelerating digitalization, are reshaping demand across housing, logistics, and data centers. But opportunity doesn't reward passive capital. It rewards conviction, operational excellence, and the ability to see around corners. This is how we are investing through the reset. Thank you for your support.